All right, guys. Now, coming to the second part of this lesson, this case we are going to be talking about how we can identify um how we can differentiate between a liquidity sweep and a break of structure on the live charts. Exactly. Please, if you are watching this part and you've not watched the part A, kindly watch the part A where we talked about the practical aspect, the theoretical aspect, explaining the concept more, and again try to also watch the major concept video where I talked about liquidity on its own and market structure on its own. So when you add all those information there, it now makes more sense when you approach your live charts on any kind of stock market, any stock you trade or any asset you trade on. So starting with the part B, because this point we are going deeper into how these things happens in the chart and how we can easily differentiate them on our daily activities on the chart. Let's use an example to make this concept easier to understand. Imagine the price is moving in a downtrend, forming series of break of structure to the downside. But at some point, the price unexpectedly breaks above the most recent structural high that leads to the last BOS. Following this, it breaks the structure once again, but this time to the downside. Now, the illustration might not be too clear. Now, let's get to the chart so that you see what this means. Now, let me view out a bit. When you look at this chart very well, what you notice here is that, sorry, so what you notice here on the chart is price is making series of lows. That means price is breaking through all the way down. This was the first one, then this was the second one. Now, when you are talking about break of structure, we are looking at either the high or the low that led to that break of structure. In this case, this is the high. This was the highest point price got to before we have this break. Remember when you go to our previous top class lessons, we said when price closes or penetrates through the previous high and closes below with a wick, we can't identify such as a break of structure. So if you are seeing this one as break of structure, it means you've not understand the market structure very well. This is when we have a good break of structure. We have the body of the candle closing above the previous low, right? With a full body outside it. But all what we are saying in this concept here or in this explanation here is that this was the high that led to this break of structure. Until this high is taken out like this, price closing above it, price is still bearish. Is that clear? Whichever time frame you have such a kind of a move, price is still what? Very much bearish. Or except this low is taken out by another move towards here before we have another new swing high. So as it is now, price is still very bearish in this case. So they said we should imagine a situation whereby price is moving down on a moving down or price is in a downtrend, forming series of break of structure to the downside. At some point, the price unexpectedly breaks above the most recent structural high that led to that BOS. So this is where the whole action played out. Now this was the high that led to that break of structure. You know I showed you earlier on. It is cycle blue, right? That's to this break of structure. And you see, they say that this is also highlighted here that high not broken. That means price has not closed above the high. So every activity between here and down is still bearish. Until this high is taken out, then we now said, okay, probably there might be a break of structure, and we still need confirmation to show that that break of structure towards the upside has started. Otherwise, it can be a liquidity sweep. So when price broke structure to the downside, we have this high. The high marked with a red cycle is the last recent structural high point that made the last recent BOS to the downside. This high remain unbroken. We can expect the continuation of the bearish movement. That means if that price fails to break this high, then we are still expecting price to keep going down. But what happened next? The story changes. You will notice that that high was taken out. You will notice that that high was what? Taken out. At some point, we can say this is a liquidity sweep, right? Price coming to that point and close. We can say this is a liquidity what? Sweep. High broken equals to liquidity sweep. Immediately price took out it, you can see there was a sharp rejection immediately after then. But proceeding further, we now have price breaking above it with not just only weak with a full body. So this time around, we can no longer say that this is what a valid high. But I'm not going to conclude everything. So let's go with the explanation based on what we have here. Now they said then after a long consolidation, price decided to break the last recent high. That means price took out that high, the structural high point. This could be a break of structure in itself. But right after the sweep of this high, price decided to drop down. And this is what is telling, this is what happened. Immediately price took out that high, which we have here, this high here. Immediately price took it out by this move. So we can say this is a sweep because we notice that price started dropping immediately towards the downside, right? Now, an aggressive bearish impulsive movement equaling to break the previous lower point, right? Again, forming a new break of structure. Forming what? A new break of structure towards the point, towards the downside. What it simply means that after price break structure, initially this was a sweep, but after the price went up again, broke above that high totally now this time around, then came down with an aggressive move towards the downside, then break structure here, took out the what previous low aggressively. This movement will create protected high or low. We call this structural point protected high or low since they are literally protected, swept enough liquidity from the previous structural point, so they cannot be liquidity themselves. Now this move, the high that led to this break of structure now becomes our new high. And the high that led to this break of structure, based on what we have here, is this move here. It was the one that led to this break of structure after sweeping liquidity, because all these ones you are seeing here was liquidity sweep. Price totally swept liquidity, break the structure full time towards the upside, then later come down. So here is now our what? Swing high. Let me go back to the starting again so that probably if you are not getting it, let it make sense. Initially, we started with an illustration saying that we want to see price towards the downside, right? Price was giving us series of uh, lower low and lower high. But at some point, price got to this point. This was the highest point price get to before it break out this structure. So in as much as price was unable to break after some kind of reversal, price was unable to break or close above this point, then this high still remain. There's high tendency that price will continue to go down. But when we got to this point, the case changes. After enough consolidation, price was able to come, not just come alone, swept liquidity at first, gave an impression that price is going to start dropping. But what happened again? Price came and now broke structure. Then after breaking the structure towards the upside, break this structure in full now, came back and now break the low. Now, two things is going to happen here. Let's assume you don't even understand structure in the first instance. Maybe when this move broke above this point, For those of you who don't understand forex structure, your plan will be okay. Price has breaking structure, then you want to start buying, which is wrong because we told you that whenever price break structure, you need confirmation. Most especially when it's in a reversal case. If price breaks structure in a reversal case, because price was down initially, if you should take this as break of structure, you need the confirmation. The confirmation is you want price to come down, make sure that the move that led to that break of structure was not taken. Then that is the first instance. Then two, you need to see another break of structure so that you should know that this first one is just a shift of uh trend, or we can call it change of character. Before you could take a trade, you should also see an break of structure, BOS. This is what I'm saying. That what just happened here now. Let me give you a practical example of what I'm trying to illustrate. We had series of move towards the downside, right? This is what we had in that move towards the downside. So we had a break of structure at first point and second point. Now, what now happened there? So this was the high. This was the high price, but this was the high that led to the break of this structure. Now, when price come and close above it, I told you that this is not a criteria for you to open buy. Before you can say this is a break of structure or this is a sweep of liquidity, something must happen. The only way you identify this as a break of structure is if price come first instance fail to break above below here. That is one. Now then when it now breaks above the previous point, so now we now have a confirmation that price has breaking structure. This is now time you start looking for entry, probably either using your trend line or your break your order block or your demand zone or supply zone. So when price now comes in, then you start anticipating to do what? To take buy. But in this case here, that was not what happened. In this case, price did series of move towards the downside, right? This is what price did. Series of move towards the downside. Now, this was our high. Price came there at first, swept liquidity, give us a bearish move, which we have here. This move like this, right? Now came back again and closed above it, right? Now that is giving you an intention or impression that price has broken liquidity. This first one was liquidity sweep, not break of structure. This was liquidity sweep. So don't use liquidity sweep as break of structure or change of character. Because if you should watch very closely, even the candle that went above it didn't close with a full body. So there was no tendency that price is going to do what? Make any move. So this first one was a liquidity sweep. The second one now is even if you fall victim of instances like this, probably your stop loss will be very minimal. Now you're expecting price to come down here for you to buy, right? For you to buy. People who are going to fall victim are two categories of people. The first set of category of people are those who trade other blocks directly. One, that means when they just see price entering other block, they place their orders. These are the first category. The second category are those who love using sell limit and buy limit, because price will definitely activate their orders at this point, whereby their stop loss probably should be around this point, the low here. They'll be using this area as their stop loss. So immediately price activate their orders, it will just move a slight all the way up, right? And then the next thing you're going to see is price will not even go far and it will just come and break, just like what we have here. So these are the set of people who usually fall victim. Those who use sell limit in a higher time frame order block. Talking about 4 hour daily time frame or weekly time frame. They are the kind of people who usually fall victim. But those who are going to use their senses, if this situation should happen in your 4 hours, if you try to go to your lower time frame to refine that order block, then you wouldn't have been a victim of this move. You wouldn't have been a victim of this kind of move. So, but I won't want to complicate or change the topic for today. I'm just giving you an instances so that you know what you are doing. So what happened here was just a liquidity sweep. This whole move here have given us the clear confirmation that okay, this move was just what? A liquidity sweep, nothing more but a liquidity sweep, not a break of structure. So if you have taken it as a break of structure before, it means you are totally wrong, right? Because you can see the move, all these moves were just sweeping of liquidity. So until if we are able to if we are to proceed in a normal settings, this is where you should be expecting price to break before you confirm break of structure, before you take your entry. But I know some of you will still be using this area, and immediately price couldn't break here, then it went again and break structure towards the downside. Then we now take this high that led to that break of structure as our swing high. So let me continue with the explanation based on the contents in front of us. So they said, then okay, then after a long consolidation, price decided to break the last recent structural high, pointing structural high point. This could be a break of structure in itself, but right after the sweep of this high, price decided to drop down again with an aggressive bearish impulsive movement, equaling to break the previous lower point again, forming a new break of structure. The movement will create a protected high or low. We call this structural point protected high or low since they are literally protected, swept enough liquidity from the previous structural point so they cannot be liquidity themselves. So you can see that this move here now is not the protected high. Protected high, that means if you should be taking any of your sell move, your stop loss should be at that area. Now let's see other examples of liquidity sweep. This is another instances where price, this was the low, this was the high, I'm sorry, this was the high that led to the break of structure, right? It led to a break of structure. So what happened? Price came and swept that liquidity, right? Before we can confirm it's a liquidity sweep, price must not what create another low. Because if price should create another low, it means this move, this massive move that came inside here was just to sweep liquidity. So for those of you who love taking other block, you will have identified this area as what? As a okay, this is your demand zone, and then you'll be expecting price to come inside and start buying. No. What happened here can be it may look like a change of character to you. So you have to redefine it before you start taking your sell order. Most usually on lower time frame. Because if it happens on a higher time frame, you might miss it. But in lower time frame, you won't be a victim. So price came to clear liquidity, came down again and break the low that led to that high. So these are things majority of you normally face in the market. Oh, price has breaking structure. Is it a break of structure or clear of liquidity? You need to check. The move alone, yes, can seems to be a break of structure, which we don't dispute. But what is going to make you understand that it is not a break of structure is if the low that led to that break of structure or high or the current high was also broken again. And immediately it is broken again, it means all what happened here was liquidity sweep. So when you can't differentiate between liquidity sweep and break of structure, it will be very difficult for you as a new trader. So when you have an alternative, let's say you won't fall victim in this first instance, immediately it gives you an alternative move. You don't need anyone to tell you, okay, this one was a liquidity sweep, then whatever you have lost at this point, since this move, since it has initiated another move, you are definitely going to recover. Except probably you have used a high lot size or multiple position to drain your account down without risk management. So if it was a break of structure, price wouldn't have come back here and take out this low. That is just the truth. Just the same thing that happened above and in the upside. Price wouldn't have go and come down with a massive move. Because if it is a break of structure, price will come here, respect this zone, then start pushing towards the upside. But for the fact that price has taken out this low again immediately after that move, it only symbolizes that, or it only means that what price came to do was to sweep liquidity. So let's proceed again to another example on the chart. Now this is another example here again where we have liquidity. This was the high. You can see price broke towards the downside. We are expecting price to come and create a pullback then go down. Rather, it took out the high, swept liquidity. The high that led to the break of structure, price came, take it out, gradually come down. You'll be expecting, yeah, you can be saying, okay, it's a change of character from from bearish to bullish. Then you come again and start placing huge buy order at areas like this. And what you just notice, price might just come, respect it a little, and break structure towards the downside. Again, after sweeping the low liquidity, it now start going down. So you have to be very careful and form the habit of modifying your areas of interest in the lower time frame. After getting area of interest on the higher time frame, try to go to a lower time frame to modify it so that you won't be a victim of all these instant breakout and falling back to your trend direction. So let's keep going. Then we have another move here. You can see price was going towards the upside, right? Price was busy giving us buy. Immediately it came up here, clear liquidity, came down again, clear liquidity, and then the next move broke structure towards the upside. Now it's making here a protected what? A protected low. So the price will not easily come here and break. Once you notice that it was a liquidity sweep. Because in some case, some will have taken this as what? A trend reversal. They'll say, okay, this was the low that led to the break of this high, this BOS. Some will tell you this was the low that led to the BOS. Okay, price has closed below it, so automatically let me start selling. Right? They'll start pumping sell. And again, you just know the price will just move a little, then go again. All your stop losses, everything, your sell limit, price will wipe it out. So you really have to pay attention to your areas break of structure very well so that you don't end up using break of ship of liquidity to be break of structure. So that you don't end up using ship of liquidity to be break of structure. Then let's move to the third one. Okay, imagine a price is trending downside constantly. Now we want to talk about the weak sweep. These ones are body sweep of liquidity. That means they come with their full body, right? They come with their full body, making it look like a break of structure. Now let's talk about the weak. Identify high probability reversal trades can be simpler than it seems. Here is a straightforward example to illustrate the concept. Imagine the price is trending downward, con- constantly breaking structures to the downside. At some point, the most recent low is breached out only with a wick. Since this week, since this break occurs without a full body candle close below, the, it cannot be considered a true break of structure. Now, there are sometimes you open your chart, you notice moves like this, right? Price will just come after coming with full body below your previous low. Then immediately that candle is closing, it doesn't close with full body below it again. Now close like this, showing a rejection, an inverted hammer. A hammer or pin bar. So you'll be expecting price. For those of you who don't understand break of structure, you'll be thinking that this is a break of structure. No, this is not a break of structure. One, this body didn't close below this low, which is this part, right? This body didn't close, rather it was a weak. So immediately this body didn't close. This is not a good high. That is why they are told that not a valuable structural high, since it did not break the structure. It is only the one that breaks structure that is valid. So a high is not valid. A higher low is not valid until it breaks structure. A higher low is not valid until it breaks structure, because if it doesn't break structure, more or less it's a care of liquidity. If it breaks structure and price breaks above it or below it next time, then we assume a kind of reversal in the trend. So this is what we refer to as weak liquidity sweep. This one come and swept the liquidity in this area, then close back. So we should be expecting what? A bullish move now. We should be expecting price to what? Start buying. We should be expecting price to start buying. Since price only wicked below the previous low point, the high marked with a red circle won't be a valuable structural high, but there is a way to make a valid trading opportunity out of this. If this high is broken with a strong volume, that means this very high is broken with a strong volume, it shows that price has done what? Price has changed its face from bearish to bullish. Note this, wick below can be contained as a sweep of liquidity. Already we can take this as a sweep of liquidity, right? Sweep of liquidity criteria. The strong volume break can be counted as another. We can also say this is a liquidity sweep, but if we add other parameters such as price coming back, refusing to break here, mitigating, then going further, then we consider it as a break of structure. So we can apply our entry model if all the other criteria are there. That means if other criteria are there for this move to go by, because now we can say this is a reversal. We consider a liquidity sweep one, or it could be uh, a change in reversal of trend. That sorry, a reversal, a change in character. The only way we are going to confirm if it's change in character, we want price to come down here, a break above it, then we now consider it as a what? A break of what? A break of structure. So when next price come back to mitigate this point, then we follow and then we go higher. So that is what it means. But in this case, we are not talking about the trend or taking entry. We are talking about wicks that cleared liquidity. So that you don't say it's only body that clear liquidity. It is also possible wicks takes out liquidity. Then it's also possible body take out liquidity. So it is now left for you to decide based on other criteria for your entry. Now let's move further. Now look at the situation like this where price came and closed with the body in the first case, but in this case, price came and closed with what? Weak. Can you see? Price came there and closed with that weak. So which means it's either price is going to go bullish from here or price is going to continue going the other way around. Price is moving in a bearish structure continuously, breaking the lows. The last low got only swept out with a wick and not broken with a body. Can you see now? There was not a body break there. So the last structural high cannot be taken as a valid high. This is what he's saying, that this point here, this high that led to that break of structure, we can't consider it as a what? A high yet, because it didn't break this point. Until it break this point, that is when we consider it as a high. Since it didn't break that point, so it is not regarded as a high. Then what happened next? Price came back and break above that high. You notice it? Immediately price break above that high with volume, not just anyhow. It came with an aggressive volume. So now this area now become area of interest for those who love trading the Bremen zone and various other blocks. So what they want to see now is price to come into this point, then continue to buy. Sorry, price to come there and then price to do what? Start buying all the way up. Because we have other criteria to confirm that this might not be liquidity sweep. One, it closed above with body. Two, it went with aggressive volume. You can see the volume. It went with aggressive volume. Then three, we can modify such area and see what will happen next. That indeed price didn't what? It didn't just sweep liquidity. It is really a BOS. So what happened to that trade? Price aggressively broke through that high with a heavy volume. So this lets us assume that the wick below of the last low is a sweep, and the break of the last recent high is a break of structure, which is change in the trend. So you can see how we are able to differentiate between a sweep of liquidity and a break in trend. Now, even though it closed with body, what you're going to notice is a quick reversal. When price closed with body and started giving you a quick reversal in the opposite direction, it signals that this is just a liquidity clear. But before you take your entry, you want to see a break of structure, either break of the high or price coming back to take out the low, whichever one it is. So before you decide to conclude that, okay, indeed this was a sweep of liquidity or a total break of structure. Now, in that case, price came back just like what we are expecting. Price came back after giving series of kind of move, came back into that zone. And what do you see? Price started buying because indeed this area becomes a good order block or a demand zone. After taking out liquidity, definitely is going to hold. Now, in the next class where I'm going to be talking about order block, I will tell you reasons why some of your order blocks doesn't hold. If price creates an order block that didn't clear liquidity, there is high tendency that price will not respect that order block, or it will not be a good or strong order block. Other criteria might be there. You might see an imbalance, you might see, but the low that led to that break of structure, if it doesn't clear liquidity, it will be very, very difficult for that price to just come into that zone and respect it immediately. So if that low didn't clear liquidity, the next time price is going to come there. If price is going to buy, definitely price have to clear liquidity. The low that led to that break of structure, price is going to use it as liquidity, take out liquidity before it started buying. As I go. So if you are going to be, so don't worry, in the next class I'll tell you what to do in such situation. So you can see that because it was a very good break of structure, we expected that area, immediately price came into that zone because one, it has clear liquidity. It can be liquidity on itself on its own again. It has taken out liquidity before down. Then when price came there, it respected it and what pushed towards the upside. We had volume, we have a good break of structure with body, then price did what? Price did bash all the way up. So please, I think that bring us to the end of this second part. When you watch the first video, the second video, the part A of this liquidity sweep, difference between liquidity sweep and break of structure, you should be able to start seeing the reasons why probably you have been losing trade in the previous days, and you should be able to start making correction to that. Then, if you want it to be very simple for you, maybe you still want more information or a guide on that, then don't hesitate to um, join the mentorship class. You can see that my number is here. You can chat me up and then you'll be a part of it where we will be talking this, even relating it with our chart, either you're a forex trader or synthetic trader. We can go to our chart, we can easily identify, oh, this was a sweep of liquidity, this was a break of structure, and so on and so forth. So, like I said, I don't want this video to be too long. Please, if you find this information valuable, kindly give the videos a thumbs up. Make sure you subscribe and then put on notification bell so that anytime I post content like this, you'll be among the first to get notified. See you guys in the next class.